What if Nvidia's next earnings report completely changes the future of AI? What if November 19th becomes the day Wall Street finally realizes it underestimated Nvidia? Again? And what if the forecast that analysts are calling too optimistic is actually too small compared to what Nvidia is really preparing to reveal? As Morgan Stanley doubles down and raises its price target just days before earnings, we have to ask, what do they know that nobody else does? My name is Osama, and you're watching StockScope AI. Wherever you are in the world, if you want deep, clear, and powerful insights on stocks, AI, and future technology, hit subscribe right now, and let's continue the video. Nvidia will announce earnings on November 19th, 2025, after market close. This is no ordinary report. This is the earnings that could confirm or destroy the biggest AI growth story of our time. Analysts expect EPS of $1.17, up from 78 cents last year. Revenue estimates sit near $54.8 billion for the third quarter, with fourth quarter guidance expected near $61 billion. But here's where things get interesting. Morgan Stanley believes these numbers might be massively underestimated. So the question is, what are they seeing that the rest of the market is missing? Just days before the earnings, Morgan Stanley raised Nvidia's price target from $210 to $220. Not after the earnings, not based on confirmed results, but before the numbers even come out. This is extremely rare. Joseph Moore, one of the top semiconductor analysts on Wall Street, is signaling that the market is about to witness a major inflection point. He calls the next stage of Nvidia's business convex earnings leverage, meaning earnings will grow faster than revenue, something that only happens when demand is exploding while operational efficiency is peaking. So again, what is Nvidia doing right now that analysts are calling unprecedented? The Blackwell architecture, Nvidia's next-gen AI platform, is ramping faster than anyone expected. It's not 2 times or even 5 times better than Hopper. It's up to 40 times faster for certain AI workloads. Morgan Stanley's internal checks show that hyperscalers like Amazon, Google, Microsoft, and Meta, as well as governments and enterprise AI buyers, are all accelerating orders at the same time. This has never happened before. According to Morgan Stanley, we anticipate the strongest result we have seen in the last few quarters. And the scary part? Wall Street still hasn't priced this in. Earlier in the year, Nvidia had 2 major problems: TSMC advanced packaging bottlenecks and HBM shortages from SK Hynix. Now, both bottlenecks are easing. And when supply meets demand in a market where customers are desperate, spending billions up front, the earnings math becomes explosive. Imagine a company where the limit isn't demand. It's the ability to ship fast enough. Now imagine that limit suddenly disappearing. That is Nvidia right now. Wall Street thinks Nvidia may peak after Blackwell, but Joseph Moore disagrees. He is already tracking Rubin, the 2026 platform that could be 3.3 times faster than Blackwell, and enterprise customers are already locking in capacity years in advance. This is not a hype cycle. This is not a short-term bubble. This is multi-year infrastructure demand, the same way cloud computing scaled from 2010 to 2020. Nvidia is becoming the backbone of modern computation. Critics say Nvidia's valuation is too high, trading at around 30 times forward earnings. But, Morgan Stanley argues something different. If Nvidia continues executing at this level, if the third quarter numbers beat expectations, and if fourth quarter guidance rises above $61 billion, then Nvidia's premium valuation is not really a premium. It's actually fair. In other words, expensive today may look cheap tomorrow. But here's the reality. If Nvidia disappoints on earnings per share, revenue guidance, supply chain, or China demand, the stock could correct sharply. Morgan Stanley is taking a bold position here. They raised their price target before earnings, putting their credibility on the line. If they're wrong, The market will punish Nvidia. If they're right, November 19th becomes the new turning point. So, ask yourself, what happens if Nvidia beats all expectations? What happens if guidance jumps higher? What happens if demand for Blackwell and Rubin proves unstoppable? Could NVDA hit $220, $250, or even higher? Is this the beginning of Nvidia's next chapter, or the moment the market realizes it underestimated the AI boom by years? Nvidia's earnings on November 19th could really shake Wall Street. Either it confirms the AI megatrend, or it exposes the market's overconfidence. We'll find out soon. I'm Osama, and you've been watching StockScope AI. If you want real documentary-style analysis on AI, stocks, and the future of technology, hit subscribe, drop your thoughts below, and I'll see you in the next video.